Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for one wild trading day this Thursday, and we're now at December 16th, 2021. Well, we had a monster move yesterday, as you know, in stock indices. Then my yin-yang, you went to Europe. You went first to Asia for their idea, went to Europe, come back to America. And through the early morning, it looked okay. And then things started weakening. And it started, I believe, with the NASDAQ again. Then the S&P got hit. The last holdout was the Dow. And then everything started tumbling back in. And I'm sitting there. We were doing our live webinar today. And we had quite a few people attend. I don't know if you're aware of that. I think we had nearly 75, 80 people registered before Christmas. That's quite a bit. So it was a great meeting to have. And the question is, what do you do? Well, here's where you're at. You're at all the different schools of thought. You have the European Central Bank do nothing on their interest rate. They still believe the economy needs to be supported. It will be. They'll get rid of one plan where they put money in the economy. They're going to have another one keep going. They don't see themselves raising interest rates, at least according to today's press conference, in 2022. The Bank of England surprised the market, and it said, the heck with that, we're moving, and they moved up a quarter point. The Bank of Mexico moved up their interest rates, and as you know, we are getting ready to do that, but we did it different. We cut the amount of tapering, but we're still putting money into everything. Today, the analysts filled the news waves. So now you're hearing, oh, we're getting three hikes for sure in 2022. Two maybe three, and then the school of thought, and I listened to them. There will be no need for a rate hike. As the tapering comes off and the supply chains fill, you'll see that the economy starts weakening and the Fed won't have to raise interest rates at all. I'm giving you the different schools of thought, and who knows which one is right. What I can tell you is I seriously doubt the U.S. will have to raise or will raise interest rates. I bet on this before March. Why? Because the Fed already said they're not going to continue putting money into the accounts, if you will. They got to let the tapering run out in order to begin the rate hikes. Number two, what makes you think they end the tapering and they just the next day have to do that? It depends if inflation is running where and if the economy is running hot. You could have high inflation with an economy that's not running hot. Supply chain issues again. Labor markets, you got to pay attention to all of it. So at the end of the year, I expect it to be confusing, and it is pretty simple. When we look at the S&P for the week so far, including tonight, which is Friday's early trade, you're down 0.93%. Certainly not much of a break, but you're not sitting here at the highs you were yesterday when you look at the daily chart. You gave that back today. So from yesterday when we came back, we went up first thing this morning, and I'm watching it. Oh, we just made new all-time highs. I was telling that to the subscribers. And then the market by day's end gave that back, and now it's sort of just sitting here. The trend of the market on the swing line is non-existent. You have a higher high, lower low. There is no trend. The market is over the 18-day average of closes. That seems to be the battle zone the market wants to trade with. You can see the higher high, lower low, nothing going on. And lo and behold, as the market got up here, you were pretty darn close today to this upper Bollinger Band. You got as high as 47.43. You were 12 points away. That's a lot. It's close, but it's still a lot. And the market's fallen back over here. Okay, seem to be just stuck going back and forth. When you take a look at momentum, when you were coming up yesterday, you were very what? You had gotten overbought. This is Wednesday. Now you're correcting it a little bit and trying to figure out what's the next event that's going to happen. When we take a look at the NASDAQ, it's the same pattern. You made the higher high, not a new high on the whole move, but a higher high back down. I think you're stuck in those Bollinger Bands. I'm going to repeat what I like. I still think, now that the news is out of the way, that as we get into next week, that's when I'm hoping to see the market really grab traction, find its support, and want to move then as we get into the new year with all the window dressing, year-end tax selling that's taking place, if it's going on right now, gets out of the way, and the market starts its move on the Santa Claus rally. I'm still considering that as the move. When you look at the Dow, it too made a new high for this leg, but is it embedding? It's a little difference here. You can't count the action of Friday. We don't know where the market's going to finish. So Thursday, both numbers were over 80, but they certainly weren't the day before. So you just have an overbought situation. The market seemed to want to churn right in through here. Now, I went back and started reading as best as I could what happens after you get a big move after a Fed parlay, let's call it that. And often you get a move in one direction, and the very next day you get a counter reaction to it. Then the market seems to settle in. At least that's what I've been looking at. The week one, the Russell failed right where it should. Again, the 18-day average of closes. Question is what happens here at 2102. In the VIX cash, you have a higher high, lower low. What have I been saying is going to be the battleground in this? Right here, the combination of the 100-day in green, the gray, as you can see, deep gray, the hyphened line, and the market's fighting there to the 18-day average, not in a trend, back and forth. I'm getting what I expected. Now, what should happen if the market's going to rally later on is you should be able to break through that and come down wherever you're going to go, and that would then hold my theory that it would actually break my current idea that you won't retest these lows back in here. That's what I wanted to say. If you're going to break right now in stock indices, you should be able to get back and fight the battle at the 18-day average. But if you get that Santa Claus rally, it depends from what level it begins will you get through this. It's going to be an interesting time. In the T-bond market, I know traders are walking like this. Whatever hair they have, they're going, we're raising interest rates. What's going on? Why are we still up in the futures market, which means rates are actually falling? 10-year notes, come on, you're pushing 142. How could this be? The Fed's going to raise interest rates. People think that the dot plot is gospel. It isn't, okay? First off, it's months down the road and things change. It's what you're anticipating based on events that are happening now, but the fluidity of those events is insane. We're going to get a big, big dash of you-know-what, COVID. Okay, take a look at what's happening in the UK. If you want an idea of what's going to happen here, you say, well, that's the UK. No, no, no. Look at the Northeast in the United States. Watch the morning news. Look at the amount of cases. You can see it. Now we're all going to go visit family and friends for the holiday. So come the, second week of January, after New Year's and all, and people have been at parties and all, how much of that COVID's going to take off in the new cases coming about? You got to think that through and understand the events that are staring you in the face. Is the dollar index actually going to do this? Go from hitting yesterday the highest high on the Fed announcement, closing back down, and then all of a sudden collapsing today? Is it going to knock on the door down here? You talk about you get your one shot coming out of the Bollinger Band, and on my course, that was your shot. And if you don't learn how to work with it, at which times you hold on to positions and don't, shame on you. In the eurocurrency, same darn thing. Take a look at this. This is what you were like yesterday. This is Wednesday action. You're going down, you come right down to the lower Bollinger Band area. Would you think you're going to the upper Bollinger Band today? But you did. Take a look. You're in the middle of no man's land, just the whipsaw, and that's why I don't go through big major events. That's what I teach. I practice what I teach in terms of putting out my trade recommendations. I didn't have anything in currency, stock indices. Now I can start coming back to those recommendations, but never in front of all these central banks, trying to figure out the reaction to them. Even if you told me what the bank was going to do, I'd probably... The question is, would the market do what that said? The Bank of England raised interest rates. I didn't expect that. I think they'd be more prudent. I think they'd say, God, we're watching cases double every 2 days in the UK. Looks like we're on track to hit an all-time record of cases. They now want people to stay home and work. It's the wrong time to make money tighter, and they decided to bite the bullet and go after inflation. They must think that the Omicron is a wave and it's going to go away. I'm not disagreeing with them. It's a wave, it's going to go away. How long it lasts is the big question. How much damage? How are the people vaccinated? How is everything going to hold up? There's a lot of what ifs. That's why I use the word prudence. Couldn't they have waited 30 days? Well, they didn't. So it doesn't matter what they could have done. That's what they did. And you went from the lower Bollinger Band, my friends, to the upper and ran out of steam. Whoa. Bitcoin, until you lose the embedded reading, you're still targeting wherever that lower Bollinger Band is again. And if the market rallies, a lot of resistance at the 52,486 to 52,263 zone. Okay, we see that. Then we get to the Brent versus WTI, and as you can see, prices just coming on down. So the big question, of course, in this market is, okay, what do we do with that? And I think that you just look at it, they've narrowed in dramatically, about 90 cents worth, the differential between WTI and that. Keep in the back of your mind that February, crude oil, I know this sounds crazy, stops trading December 30th. So we got to start looking at the March already. Pretty crazy. They give you a date of February crude and it expires in December. Okay, I looked that up today. I'm going, what? Okay. Lower highs and battleground, the 100-day average and the 18. Trend down with lower highs, lower lows, bias up into resistance and overbought. Confusing chart. WTI, same identical thing. Confusing chart. Heating oil. Okay, you got up today. Now, I don't know if this took out this high. Maybe I got it wrong. 227.78. No, I don't think I got it wrong. 227.37, and now you're backing off. Still lower highs, higher lows, resistance, trying to find support here, but you're using a lot of the energy in the market because you're overbought. I don't think there's much to do there. I think we got to keep our eye. What is the weather pattern going to be? Nat gas, you rallied today. You still have an embedded reading. I think the pros were selling the market, still looking for lower prices, but keep your eye on weather. That's the thing you always do when you're looking at those markets. You know, if you're like me, I know what my routine this morning was so simple. I woke up and I always hit my phone right away. The room's dark, it's early, it's 3:34 in the morning. Before I turn on the TV with the big bold in my eyeball, because I watched that for about 10 minutes or so, let me look at my phone and I go to my QT Mobile. What are the markets doing? And I'm always ready for my jaw to drop, and then I'm reading. I have my phone set for the nighttime reading. Well, then I want to turn on TV and get an idea. But you're not going to get the ideas I can give you. And the reason is I'm a commodity guy, born in this business, if you will. That's what I like to call it. Got my feet wet in it and have been in it since 1969. So I'm here. I'm doing this every day. Chartist. I think I'm pretty good as a chartist. And throwing out ideas for you in all these markets first thing in the morning. Here's why, here's what it's saying, here's where it'd be wrong, here's where it's right, here's the news of the day, this is what happened in Europe, this is what's happened in Asia, here's the short-term chart, the daily, here's the weekly, to back that up, this is what I think looks worthy of pursuit today. Days where I'll tell you, hey, I don't think there's a darn thing worth doing. Here's the reasons why, and I'll show it to you on the chart. The thing is, I'm not sitting there telling you research. I'm showing you chart action. So if you're a chartist looking to work with a chartist, I want to be that guy. Just go to our website. Under the word research, it's all explained. Take a look. If you like it, you give yourself a 30-day trial. You can quit at any time. On our website, we have built it now where you can get in there once you sign yourself up. You can change your subscriptions, cancel them, pause them, move from one to the other. I mean, name it, we've done it. It's taken us a long time, but it's all there. And as you make these changes, you get notice of them sent to you by email as well. Pretty cool. We listened over the year. The research part of my arm just keeps growing. It's biggest it's ever been. People come on board, they sign up for a year at a time, they want those discounts. I think it makes sense, but you try it in any way you want to go. IraEpstein.com under research. Hope you give it a try.